Now, when it comes to the highest quality dividend-oriented or dividend growth ETFs, I always include the iShares Core Dividend Growth ETF DGRO in the conversation. Now, that's because this ETF offers a nice mix of growth potential, but also offers a nice solid starting dividend yield, along with some massive dividend growth historically. Now, in this video, we're going to analyze DGRO and see what's been going on with the ETF as of recently. I'm going to share with you guys some of the pros and cons of this ETF and what I personally think of it. And then later on, towards the end of the video, I'm going to share with you what a $25,000, an initial $25,000 investment is going to look like long-term invested into an ETF based off of the previous performance. So if this ETF is in your portfolio, or maybe you ever thought about adding it into your portfolio, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, to understand what DGRO is, how it works, this is number one, why DGRO? This ETF offers low-cost exposure to US stocks focused on dividend growth. Now, dividend growth is one of the most important metrics as a dividend investor because that's basically how much more and more in dividends you're going to get paid over time by basically doing nothing but holding onto the shares you already own. It then says number two, access companies that have a history of sustained dividend growth and that are broadly diversified across industries. Number three, use at the core of your portfolio to seek income. Now, even in the investment objective, it talks more about dividend growth or consistently growing dividends. So if you're like me and if you're looking for dividend growth, exposure in your portfolio, I mean, this ETF already sounds pretty perfect. Now, another important aspect about any ETF is, of course, the expense ratio. The expense ratio is 0.08%, so it is much more than that of VU, a little bit more than that of SCHD, but still relatively cheap. Now, one of the main things I personally like about DGRO is the fact that it's very, very well diversified, over 400 individual stocks within this one ETF. Now, maybe you're an investor that does want or maybe doesn't want more diversification, but for me personally, I'm sort of afraid of risk. I don't really want to have all my eggs in one basket. So for me, I tend to overly diversify, which is what this ETF is doing if you ask me. Now, the other reason I do like this ETF a lot specifically, even comparing it to something like SCHD or comparing it to VU, for example, this ETF honestly offers sort of a nice mix in between the two. I mean, of course, there's a lot of overlap with a lot of these different dividend growth ETFs, but the thing I like about DGRO is that it offers some of the growth names like Microsoft and Apple inside the top 10 holdings that SCHD does not have. But then also you see names like abbvie or names like Coca-Cola, Broadcom, different names that are dividend payers, dividend growers that are also inside of SCHD. Now, the cool thing with the stock market is if you want a little bit of this ETF and that ETF, you can of course just buy both of them, even if there's some overlap. But like I said, the thing I like about DGRO is the fact that there is sort of a nice hybrid of holdings, honestly, if you look between VU and SCHD. And speaking of sort of a hybrid of both SCHD and VU, if you look at the dividend yield, the 2.25% trailing 12-month dividend yield, that's honestly right between what you're going to get if you bought into VU with a 1.21% yield and SCHD with like a 3.6% yield. So by buying into DGRO or picking this ETF over, say, SCHD, you're getting a little bit more exposure to growth. But then if you're buying this ETF compared to VU, you're getting a little bit more income generation. So honestly, it's a nice hybrid if you're an investor that doesn't really know if you're going to be focused on more dividends and dividend growth or if you're going to be focused on more growth potential. Now, speaking of growth potential, this ETF has grown like crazy over time. I mean, just as far as price return goes over the last decade or so, it's up 151%. Now, it also does pay that 2.25% trailing 12-month dividend yield, so you aren't going to get massive amounts of cash flow from DGRO, but it does pay a decent yield, I mean 2.2, 2.3%. And on top of that, the dividend growth rate has been anywhere from around 8 or 9% over the long term. Now, that being said, if you are interested in a little bit higher of a yield, but you want a very similar strategy, at least for the most part, then SCHD might be able to offer that, for example, or if you want just much more pure growth potential and want to have more exposure to more names that do have the potential to grow a lot faster, but also have the potential to drop a lot faster. Then, of course, the VU ETF could also be good to look into. Now, before I go through and share with you guys what a $25,000 investment into DGRO could look like long-term in a portfolio based off of the previous metrics we have, I thought this was also sort of interesting. If you take DGRO versus SCHD and use total return as a metric, it's kind of crazy that DGRO has actually outperformed. Now, over the last decade or so, they've been very close. I mean, for the most part, these ETFs trade very, very in line. But on the max time frame, as of right now at least, DGRO has outperformed SCHD, which is sort of shocking. Now lastly, it's time to get down to the bottom of it. What is a $25,000 initial starting principal investment into DGRO that yields 2.25%, has an expected annual dividend amount increase of around 8.28%, and expected annual share price appreciation percentage of around 6%, 30 years invested, $6,000 contribution per year on top of that. DGRO does pay out a dividend on a quarterly basis, and these are going to be dripped, so all the dividends over the years are going to be reinvested into more and more shares of DGRO. Now, because DGRO does grow pretty fast over time and also offers a decent starting yield with some nice dividend growth, you're going to see how just an initial $25,000 investment, which is relatively small, and $500 per month beyond that is going to turn into a boatload of money. Alright, so the numbers are in the first year, $25,000. The initial money is going to pay you around $560, $570 per year in dividends. Now, after that $500 per month is invested, plus the dividend increase, we're almost at $33,000 by year number 2, and around $764 per year in dividends. Now, it would take around 8 or 9 years for this portfolio to surpass 6 figures at around $110,000 and around $3,000 per year in dividends by the 9th year. Now, again, if you want to contribute more annually, obviously you could probably grow the portfolio a lot faster, but I feel like for the most part, this is sort of realistic, a $25,000 starting and $500 per month. Now, going throughout the years, you can see the portfolio is going to start to compound faster and faster as the numbers get larger and larger, because as those dividends get larger and they get reinvested into more shares of DGRO, it's only going to compound things quicker. Now, by around 22, 23 years, based off these numbers, the portfolio would now be worth over $500,000 and around $17,000, $18,000 per year in dividends. Now, all the way at the bottom, 30 years invested, just based off of these numbers, based off the $25K and $500 more per month, we're sitting at an ending balance of around $1.1 million and around $42,000, $43,000 per year in dividends. Now, if we were to contribute absolutely nothing, just invest the $25,000 and sort of just let DGRO grow, pay us dividends, and reinvest those dividends into more and more shares over time, obviously the portfolio is not going to grow quite as fast. The $25K is going to turn into $100K, but it's going to take like 18 years. Now, by the end of 30 years, just based off that $25,000 initial investment, we're still talking $300,000, which is a massive amount of growth considering this is just based off of $25,000 that I didn't forget it. But overall, I still do like DGRO quite a bit. I think in the dividend growth ETF category, DGRO would have to be number 2 or number 3 of all time for me. I like the fact that it offers a little bit more growth potential than that of SCHD, but then offers a nice starting yield compared to some of the other ones. Not for me personally, because I am much more of a dividend income focused investor, and I'm trying to build my personal portfolio to cash flow sort of as much as possible, as fast as possible. I still, as of right now, am buying things like SCHD compared to DGRO. But lastly, I do want to hear from you guys down below when it comes to the iShares Core Dividend Growth ETF. Do you currently hold any shares of DGRO? Let me know yes or no in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.